David Bloom. I'm the head of foreign exchange strategy for HSBC. Unfortunately, prospects for the global economy are looking pretty poor for 2008, particularly in the transatlantic economies. Not so much in some of the emerging market economies, but the US is flirting with recession. The UK, we've already had a second wave of interest rate cuts, and we believe there'll be further to come. We eventually believe the ECB will be forced to cut rates quite aggressively this year. And so the prospects for this year, for 2008, for some of the big economies is pretty poor. This will have a knock-on impact onto some of the emerging markets, but they're much better shaped to take the slowdown in the Western markets. And the whole theme of what's called decoupling is a very intense debate in the market. In other words, can these markets survive a reasonable downturn in the transatlantic economies? And they will survive it, they will slow, but we think they'll still do pretty well. There's an interesting point about a recession, which a lot of people are looking for in the US, and it's defined for one reason or another of 2 quarters of negative growth in a row. And that's just an arbitrary definition, and it may be coming to the US. The UK, I don't think we're looking for an outright recession, but things are slowing substantially enough to look for further rate cuts in the UK, further rate cuts in the US, although their rate so far they've cut extremely aggressively, and eventually the ECB to cut interest rates. So these economies and central banks are going to do something about it. So that should temper the idea of there being an outright recession. It's horrible, it's nasty, there's a slowdown, rates are coming down, but I think by 2009 we should be through the worst. Of course, economic downturns and falling markets offer opportunities, but let's face it, on aggregate, people are losing. But there are opportunities to be had, and there is a silver lining behind every dark cloud. And a good example is in the UK. We've had the consumer in the UK causing, you could argue, the Bank of England to raise rates as the economy's been strong. Things will turn down, things will get very hard for the consumer. But for some of the exporters and the manufacturing sector, a fall in sterling will come as a relief. So that's a typical example of where one segment of the economy has suffered and they will get some relief. So there will be some opportunities out there, absolutely. But don't forget, if we have a generalized downturn, there are more losers than there are gainers. The interesting point about emerging markets is that they haven't been absolutely destroyed by the downturn in the Western markets. This comes back to the concept of decoupling. Can they decouple? And to an extent they have. To an extent, emerging markets are in a much stronger and better place than they've ever been. And there are various reasons for them, some of technical relating to the external debt and other factors of these economies. They're much better shaped. Investors want to invest in these economies. If you look at me, I'm graying, I'm not growing. We want growing economies where the population is young, vibrant, we can unleash capital in these economies. This is where you're going to want to put your long-term future, long-term pensions of many companies. So we're very optimistic about emerging markets. So in the short term, some of them may wobble, there may be some problems. But I think longer term, if you're a much longer term strategic thinker, I think the opportunities and the growth and the returns are to be had in some of these emerging markets. The position of the UK economy in the economic downturn is an interesting one. There's no doubt that it's the second economy to have slowed down substantially after the United States. And we're looking for the housing market to continue to fall and the economy to slow, perhaps unemployment rates to go up. So it's not a very bright picture. But the bright spot is that the MPC and the Bank of England have been quite fleet of foot They've already cut interest rates once last year. They've cut interest rates again this year. And we expect them to cut interest rates several more times as this year progresses. So things will get difficult, but there is relief out there in interest rates coming lower. We don't expect the UK to go through a recession in a way the US might. We don't expect the UK housing market to fall as heavily as it has in the US, but it doesn't mean we're immune totally. I think the UK economy is going to have some rough times ahead. And our comment to most UK corporates, most UK individuals, is just protect yourself. Take hedges. Well, what we mean by that is don't go wild about risk. Protect yourself against risk this year. Let things bed down and then look forward to a much more rosy picture in 2009.